you're a bit nervous about equities at the moment, then I've got a fund that's well worth looking into. It's got a remit such that it can invest in gold, short or long-term bonds, as well as equities. The performance of the fund has been pretty phenomenal. On a cumulative basis, it's ranked in the top quartile over 1, 3, and 5 years, as you can see on the left. And then on the right, in terms of its annual performance, it's delivered a positive return in each of the 5 years, including the rather tricky 2022, which is represented by the 24 to 36 months, where it still was able to develop a credible return. The fund sits in the 60 to 80% equity category. And if we go to the website Pick a Fund, we can see that it's ranked number 1 out of 318 comparators over 5 years. Over 1 year, the performance is number 3. You'll also notice that the ongoing charges fee, the OGC that it says there, is actually 0. And what this means is that the wages of the fund manager and the analyst and all the selling and marketing and admin costs of the fund, you don't pay for that at all. You only pay a performance fee if the fund beats its comparator. And here's what the fund fact sheet is saying in terms of fees. So a fairly hefty 0.69% in the last year, but there was backed up by good performance. It's claiming that over the last 3 years, the average performance fee is 0.65. So, and it's not just me that likes the fund. Here are some other ratings and awards that the fund has achieved. The fund is called the Orbis Open-Ended Investment Company Global Balanced Fund. It was founded in 2013 and it benchmarks itself against 60% MSCI World Index, 40% JP Morgan Global Government Bonds hedged into GBP. And at the bottom, you've got some graphs showing its performance over time. If we look at the portfolio compared to its benchmark, we can see that it's underweight US, 36% versus 44%. It's overweight emerging markets, 16% versus 0. It's overweight in terms of commodity linked, which is basically gold, 5% again versus 0. And it's overweight things like Europe ex UK and the UK. So it's allocating assets on an active basis with the aim of trying to outperform its benchmark. It's got a total of 118 holdings, which is pretty good in terms of diversification. Not too few, not too many. For the fixed income, the bonds, the duration average is 3.8, so it's less than its benchmark that's coming in at 6.7. And what is very interesting is the active share, where this varies between 0 and 100, where 100 means you're completely ignoring the index. So on the fixed income, this is at 97, which, yeah, I'd kind of agree with, because I think that bond indexes are generally pretty awful. They're quite dangerous to invest in because of their exposure to longer term bonds. Then it also has an equity active share of 97%. So again, it's kind of ignoring probably the larger names, and I suppose it does have fewer equity holdings. The fund is more volatile than its peer group, probably due to its allocation to equities. In terms of the top 10 holdings, gold is number 1. Then it's got treasury inflation protected securities at number 2 in terms of 1 to 3 years. Then it's got some fairly interesting equities, quite stable ones, I would hope. I'd rather see something like Procter & Gamble in there, to be honest, something that's increased its dividend every year for the last 40 years, but there you go. And it's also got Burford Capital in there at number 10, which is kind of uncorrelated to stock markets because it's a law firm that's profiting from various legal cases. There's an excellent filter on the Pick a Fund website where you click on the INV button and it tells you which platforms offer the fund. And we've got the list here. So Hargreaves Lansdown isn't on the list. Actually, you can buy this on Interactive Investor, but it's a great way to just filter which funds are available on your choice of platform. Here's an interesting peer comparison to the investment trust personal assets, ticker PNL. So when we had the unexpected coronavirus crash, then yes, the Orbis fund massively underperformed. However, in normal market conditions, when equities do okay, then Orbis has absolutely thrashed personal assets. And so I'm much happier to hold Orbis through kind of thick and thin, whereas I just don't really trust. I'm not really happy with some of these other funds. They're way too overweight in long-term bonds, which is just a completely stupid idea. So as far as I'm concerned, I'd rather research Orbis more, get happier with how it's performing, and possibly look to increase my exposure there. We think of our investments in terms of buckets. So the first one is 0 to maybe 3 or 5 years. And at the moment, you could hold either a money market account, a high interest rate bank account, or short-term UK gilts, and you'll get a fairly decent return. Maybe it beats inflation, maybe it doesn't, but the idea is that with the 0 to 5 years, it should be risk-free. You should completely understand what you're invested in. At the far end of the scale, there's maybe 10 years plus, and these things can be a bit more risky, things like the NASDAQ or things like maybe India. There's a few punts in there that you think over the longer term could do well. And this Orbis fund is a great fund to maybe consider for the 5 to 10 year bucket, where it's pretty solid and pretty stable. And so ideally it will generate decent returns over the medium term, and you could hold it maybe alongside a global equity tracker. But just in case equities don't do so well, this fund also has exposure to things like bonds and gold, and that can help to smooth out your returns. This channel is all about helping you to plan for retirement and invest effectively. If you're interested in learning more, sign up for my newsletter at my website, ianshadrack.com.